Hello. So if you've been following this oil situation and oil pricing situation, you know there's been a lot of movement from under $100 to over 130, and then now back down to about 100 and sitting right now at 105. So that's kind of been crazy. It's a little confusing as to why this has happened, but I'm going to try and help you sort some of this out today. First, I want to talk a little bit about what happened leading up to this, and you kind of know the story, right? There's Ukraine and our sanctions on Russia. What we've kind of done is said that all Russian assets that we have access to, we've frozen, so they no longer can access the U.S. dollar. They can no longer access anything that they had in America or had access to inside of America. Other countries have done kind of the same thing. So it's put Russia in a situation to where it's become hard for them to sell their oil. And the initial implication of that was that there would be less supply for the same amount of summer demand, driving prices up. So we saw oil prices skyrocket, jumped up to 130s. Even said that at one point we thought we'd see $150 to $180. I think it was Goldman Sachs said $180 per barrel could happen this summer. Still might happen. We'll just have to wait and see. But something really interesting happened since then, and oil prices fell again. They fell down to 100 and back down to about 100, even dipped below 100, and we're in the high 90s for a little bit. So it raises a question of why. There's a thing that we talk about in the industry in economics called arbitrage, and this is a big part of the reason. Arbitrage, we see this in our everyday life. It's where the same item on two different marketplaces has two different values. So we see this in that you can go to Goodwill and buy a used pair of shoes that are in good shape for $5 and throw them on eBay and make $100 off them. And we know people, I know people, you probably know people too, that do flipping like this for a living or for side money. It's very possible and very doable. Arbitrage is what does that. It's this idea that it's the same idea that allows if you're a creator and you're making shirts or crafts and you're selling them on Facebook, you're probably making less money on Facebook for the exact same item than you'd make on Pinterest, because Pinterest has a different marketplace and different buyers, and those different buyers are willing to pay more on Pinterest. Now, in the oil industry, what this has done is created two different markets for oil based off of where the oil is produced. So if the oil is produced in any country that doesn't have sanctions on it, Saudi Arabia, for example, or American oil or things like that, or Canadian oil, if it's produced from any of these countries, it's the higher priced oil because there's no sanctions. There's plenty of people to buy it, so a lot of demand. That demand put oil up to $130 plus at one point. At the exact same time, based on where the oil was coming from, oil that was coming out of Russia had dropped in price down to about $80 per barrel. So if you're a large country like China that doesn't really care what America has to say about things, it gave you an opportunity to buy some really cheap oil. Not just cheaper than what the current market rate is, but cheaper than what the real market rate would be without the sanctions. So China and other countries decided they don't really care what we think. They're buying Russian oil. Germany is still buying Russian oil because they have to. Brazil said they're going to continue to buy Russian oil. And it's created this arbitrage opportunity where now the amount of demand in the marketplace has gone down because there's less people buying the same oil that you and I are buying. And because of that, our prices came back down a little bit. So in a weird way, it kind of created a black market, and that black market helped us keep our prices down because it took some demand off the marketplace. Now, what does this mean long term? Well, I don't really know where oil is going to go. I suspect it's going to continue to go up for a few different reasons. Mainly the news that's come out that China and Saudi Arabia are working on a deal to start selling oil from Saudi Arabia to China in the yuan instead of in the US dollar. And that will decrease demand for our dollar, thus increasing our inflationary rates. So my next video next week, we'll talk specifically about what you can do to help fend off inflation in your everyday life. I think it'll be probably one of the most important videos I'll put out all year. So please watch for it as it comes out next week, and hit the share and like button if any of these videos that I put out are valuable to you. This one's a little more just informational, help you understand a little bit about what's going on, but we'll give some real good application stuff to you in next week's video.